there, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 5th of November, 2022, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of November. And as we look across these three major pairs, all of them started weak from the start of the week and right through till Thursday until Friday, where it managed to recover and rebounded back up from oversold support position. And that's on non-farm payroll Friday. That's just yesterday. And even though the jobs added was better than expected, the market took it as profit taking for the week and managed to rebound back up, even though it does mean that the potential inflation is still fairly high, and that would mean the Fed would still need to continue to increase rates, and whether it's going to be at 0.75 or 75 basis points or going to be lowered to 50 basis points in December is not for sure yet, as the jobs is still fairly strong. Job growth is strong. That would add to further inflation pressures. So, and also for all the major pairs on the Wednesday, there was the Federal Reserve's rate decision, where they confirmed that they're raising rates by 75 basis points to 4% now. So initially, the majors did try to push up higher, but ran into resistance and just retreated and fell and continued lower on Thursday. And that's where the rebound on the Friday started with from the support levels. Okay, so let's start with the Euro. And it started weak, slight gap down at the start of the week on Monday, after closing right at the upper trend line of this bullish channel on the previous Friday, and fell lower right through till Thursday, where it did manage to break down below the lower channel trend line, and that's where it managed to recover above the 97 round figure, above the 62 pip retracement here, and did manage to recover quite strong to basically right to where it started at the start of the week, and right at the gap, so just below the round figure parity level. And we'll see if this week there's enough bullish momentum to push it through to test the next round figure at the 101. Or whether it's just going to run into a resistance already right at the parity and then consolidate for the week. And this week, there's no major news from the Eurozone, but it's exposed to the inflation data from the US coming up. So if it does not taper off, then there's going to be probably a US dollar strength again. So critical figure for the US CPI. And if it does start to taper off, then the major pairs could take advantage and push through for the interim resistance into the next key resistance levels. Now we can also move this fib now to show this latest swing high, and that was the retracement back into the 62 fib level. And if we wanted to also take from this swing move up, then it pulled back into the 78.6 retracement level. So we could use this smaller swing here and use this as our current Fibonacci retracement area. So now we'll see if it's going to test this resistance, and looks like support is still going to be at the 97 round figure. Okay, so there will be interim resistance up here. At 1 parity level, and let's extend this resistance zone. The interim support will have a confluence with the 50 fib retracement and this lower channel trend line. And this next major support is going to be at the 78.6 where it bounced off from, and just below that at 97. Okay. So let's compare this with the US dollar index, the DXY, see whether it has also retreated on Friday, since the euro has made a significant rebound here. Okay, let's switch over. And here's the US dollar index, the DXY. And as an inverse correlation with the euro and the other major pairs, that's the strong retracement lower here on Friday, right after the non-farm payroll report, and fell from the resistance zone just below the 138 fib extension and fell right into this swing high here, right into this previous swing high. And with the daily 55 dynamic support there as well. So it's still within this bearish channel that we just identified last week. So it's probably just going to, if it does extend lower, then it could try to test this significant support here at the 78.6, just above the 109 round figure. So the next interim support at 110, major support at the 78.6, just above the 109, this zone. Now this will I think we can remove this one for now. This is still significant resistance up at the upper channel trend line and the 138 fib extension. So we'll see if there's a bearish continuation next week, and if it does, try to test this 78.6 where the previous swing low was, or whether it's able to recover and bounce off this swing high here, or even at the 110, try to recover back above the 111. If it does not pass the lower channel trend line, and if it does make a higher low, then that could be a sign that the US dollar is going to recover further. And this week, the CPI data will be a major trigger on Thursday. If it is still fairly high, and then that will likely influence the Fed to keep at a 75 basis points rate hike in December. So that's going to be keep pushing the interest rate higher. So that's going to be a critical data point for them. All right, so for now, I think we'll leave the fib levels as it is. And let's move back to the other major pairs. Okay, before we move on to the cable, let's also just take a quick look at the weekly time frame for the euro. And that's where we see that strong rebound and climbing back up to where it opened for the week. So that's fairly strong rebound there, but it could also mean consolidation next week with this inside this week. So we'll see how much bullish momentum there is before it starts to consolidate. All right, let's move on to the cable. And it managed to climb back up above this lower trend line of this triangle. Now I think we can remove this upper trend line and perhaps move it back to this upper trend line here. And on Thursday, the Bank of England did announce their rate hike at significant 75 basis points. That's the highest increase in decades as well. And that still pushed the sterling pairs down lower on Thursday, but since it was oversold, Friday managed to rebound back into the 113.50 level, right back at the 78.6 retracement. So this is still going to be interim resistance, but we'll drop it back down. This will be the support now for now. Now we could also update this fib to move to this continuation move, and that's where it stopped at the 138 fib extension. Pull back to just below the 50 fib here. So if we extend all the way back up, that's also possible, and that as we trace back down below the 62 fib retracement from this swing high. But for now, I think we'll leave it as it is from here. And this is now going to be the interim resistance zone. at the swing high and the round figure of 115. So we could mark support at the 50 pip. Next key resistance is going to be at 117 and the 162 pip extension. So let's mark this as the next key resistance here and remove this one. All right, so we can adjust this trend line, and now it's looking to be like a bullish channel here forming. And this week, apart from the US CPI, where it'll also be exposed to that data, there's also the UK GDP on Friday. But other than that, no other major news. And let's take a quick look on the weekly time frame, where that's the rebound of the support and recovered about half of the range for last week. And with this wide range candle here, there could be some consolidation. So let's see if it's able to break through this 115 round figure and interim resistance zone and continue higher. But this is a critical trigger where we'll see where the figure is, and that will influence the direction of the rest of the major pairs. Okay, let's move on to the Aussie dollar. Okay, and that's also sitting right at bouncing off the lower trend line here. It was where the key support zone that we marked at just at the 63 round figure. Dip just below that to hit the trend line and then rebounded higher. Interim support is still valid at the 64 and this swing low. Swing low here. And it managed to recover back up into the 786 pip retracement and just below the 65 round figure. So this is still going to be an interim level, resistance level. Key resistance is still going to be at the 66 along with the 62 fib retracement level here of this swing move down. Right, and no major news for the Australian economy next week, so it's only exposed to the USPI as well. And we could also add an upper trend line now with this highs, and we'll see if that's going to break. So indeed, this daily 55 EMA is also going to provide dynamic resistance. And if it does break through, then this is definitely going to be a major resistance zone up here. Otherwise, it could just retrace lower and consolidate inside this triangle now. Okay, so do check out my other videos on spot gold and dollar yen as well. And have a safe week and a good trading week. And cheers for now.